Financial Fridays is here. Come on in the room, everyone. Join me on this wonderful Friday. I hope you guys are having a good day. Come on in. And as you're coming in the room, I need you guys to do me a huge favor and make sure you hit the share button. We want this thing to go viral, as they say. We want people to see it. So as you come in the room, you hit the share button. Not only do I need you to hit the share button, but I also need you to say what's up to me. Y'all know I love each and every one of you. So make sure you say hello, so we can, so I can know that you are here. And not only that, I also want to be able to answer your questions. So and also, as you guys know, if you have any questions during this, be sure to put them in the comments. I'll do my best to make sure I answer every question that you have. And if I don't get to your questions, I always go back through and review your questions and comments and can answer them then. If you have any questions that you don't feel comfortable asking me online, then I need you to make sure that you you can always inbox me your questions, and we can and I can help you from there. But please be patient with me. If you ask me a question online, in my inbox, it might take me a moment to get back to you, as your boy is kind of busy. So, all right. So again, I hope you guys are having a good Friday. Make sure you hit that share button. I won't keep you long, and I don't mean that in the preacher way of I won't keep you long. Y'all know when you go to church and they be like, we ain't gonna be here long. That means you are in. And if you don't know this, if you go to church and your pastor or your preacher says, I'm not going to be before you long, that's code for we're going to be here all day. So I won't do that to you. Okay. All right. Again, as you come in the room, make sure you say hello. And if you have any questions, please put them in the comments. So if you don't know who I am, my name is Winfred Burns. I am the CEO of Global Drive Network. Global Drive Network is a media company. We have both radio with the Scoop Radio Show and The Word on Wednesdays that go live. We go live on Tuesdays and on Wednesdays on Blog Talk Radio. So you can always go there and search us and search Global Drive Network and subscribe. On Tuesdays, again, it's the Scoop Radio Show. And then on Wednesdays, it's the Word on Wednesday with Pastor Burns. So that's going to be, those are the two shows that we have for now. We also have Nouveau Exposure, which is our magazine. It is a free publication that you can go to nouveauexposure.org and definitely get. It is an awesome publication. We just actually celebrated the release of our 2-year anniversary. So 2-year anniversary of Nouveau Exposure. The edition just dropped. So again, go to nouveauexposure.org and get that. So, all right. Now that we got that out of the way, let's go ahead and get into it. What's going on? Yeah, I had to represent today. So I also, again, make sure you hit the share button because I've got some things that I really want to share with you today, and I think they're important. I'm sorry, I'm sharing this real quick too. So again, we've got some financial solutions that are for today, and that I think we definitely need to pay attention to because things are what they are. So let's get into it. I've got about 6 things I want to cover with you guys. Again, that if you have been watching the posts that I have been putting up all morning, there are a couple of articles and studies that I've been reading through that kind of confirmed what I already thought and what I already knew. And so these only kind of confirmed it, that as an African American, as Black people, we are in trouble financially. Hey, Q, what's going on? And so I want to make sure that we address some of these issues. Not in the sense that, or at least that we start the conversation, because we've got to do something. If you looked at those numbers, you'll see that from a student loan perspective, which is, and the reason I started with student loans is in this country, student loan debt is now the largest area of debt in America. So in America, when you look at the sum total of debt, student loans have the highest amount of debt of any area. So more than mortgages, more than cars, more than credit cards. Credit cards used to be the place, but now it is in student loans. In that area, African Americans owe more in student loan debts than any other segment of the population. So, and if you couple that with the fact that research also shows that not only do we owe more in student loans, but we get paid less, therein lies a serious issue. So, we take out more in student loans, but we get paid less. So that means that gap is causing more and more and more of a deficit. Why is this an issue? Because it is very difficult to build a positive net worth. It is very difficult. It's impossible. You can't with that much debt, because if it takes you 10, 15, 20 years to pay off your student loans, that's less time that you have to invest and create wealth. And that doesn't just affect you, but that affects our children and our children's children, because what typically happens is we are redoing this with every generation. And so my objective is to talk about today some things that we can do to make this better. Now, let's be clear. The one thing I want you to do is you have to go into this not from a defensive mindset, okay? All of us, listen, I always say we all broke. And so let's just not pretend that everything is okay. Can we be honest and just say, listen, it ain't okay. Yes, Sasha, I hear you say you cry every month. I hear you. When it's time, I don't even like people named Sally. Sorry if your name is Sally. It's just a joke. Because of the amount that you got to pay to Sally Mae every month. Okay. Because, and now that they done switched their name to Navient, yeah, I don't know if I even like Navient either. So we just got to make sure, again, that we have to be honest and say, listen, this is an issue. This is a problem. We're going to address it. Let's do something about it. Okay. Also, if we can do that, then what that does is that opens us up and positions us to have the necessary dialogue and conversation with people who are in the same position as we are. Okay. And so that's what we want to do. We want to stop looking good, and we want to actually start being good. I don't want to look rich. I don't want to look like I have it all together. I actually want to have it all together. Cool. All right, cool. So here we go. So the first thing I'm positioning this by saying is that we've got to start making some very hard choices that are going to affect us both in the long and the short term. So the 6 things I'm going to talk through are going to affect us in the long term, and they'll affect us in the short term. And some of these will affect us in both the long and the short term. Cool? Here we go. So the first thing we need to address, or the first thing that we need to do, is that we need to begin to own real estate. Now, let me preface that by saying, when I say own real estate, I'm not just referring to owning a house. So in this country, and I addressed this in one of my comments, when we talk about wealth, we look at assets. Okay. And so an asset is something that generates cash or generates a positive, positive, what's the word I want to look for? Looking for a positive, whatever, in our portfolio. Thank you. That's what I'm looking for. So something positive to our portfolio, meaning it is adding value. That's what I'm talking about, equity to our portfolio. So when it comes to a house, the way a house is positioned and why it is typically the biggest area that most people have biggest asset that most people have, is because of the equity that you get from owning a house. So what is equity? So equity is, if you own a house and the house is worth $100,000 and you owe $50,000, that means that you have, because you have $50,000 of equity. So you don't owe, so 50,000 of that is technically yours. And when I say technically, it's because you don't actually have that until you sell the house. So we call that, just like in the stock market, a paper asset. Okay. My definition of asset is a little different. I lean more towards the Robert Kiyosaki school when it comes to this area, in that an asset also has to produce a monthly cash, either a monthly inflow of cash that's over the expense, or it has to, again, not have any type of debt attached to it. So when I think of a home being an asset, I think of a home being an asset after it is either paid off and paid in full, because at that point, the only thing you owe on it are property taxes, or if you are renting this property and you are getting a monthly cash flow that is over and above, I used 120%, but 120% of your monthly expenses, not just your mortgage, but your monthly expenses. So meaning if you are paying for property taxes, if you pay for insurance, if you pay for maintenance, if you pay for lawn care, all of those things are considered a part of your monthly expenses. So we've got to own those. Not only are we, when I say real estate, am I referring to residential property? I'm referring to what's called commercial property. So a commercial property, in terms of residential or commercial property, would be anything that's over 4 units. So in the banking industry, if it's over 4 units, it's considered a commercial property. So you can have a property that you live, a 4-family unit or 3-family that you live in, one floor, you rent out the other 2, and those other people who live in your building are paying your mortgage or get you to that 120%. And you are then living there for free, number one. And then number 2, you are building wealth by the equity, because they're paying the bill. They're paying all the bill. And remember, every month as you pay that mortgage down, you are then creating even more equity. The other part of real estate, and if you've seen my video, if not, go to my YouTube channel, Winfred Burns II, and you'll see I did a video on why it is important, if you own real estate, residential real estate, why I believe that you should have a 15-year mortgage as opposed to a 30-year mortgage. And the basis of my theory in that is that if you get a 30-year mortgage, if the average person gets a mortgage at the age of 30, which is what the statistics show, in 30 years, you are 60. Most of us at that point are either at retirement age or very close to retirement age. So if we retire at 66 or 67, then that means you really only have 7 years worth of equity or worth of wealth that you are building, and the amount that the true cost or the true amount that you have paid into the mortgage is actually almost doubled. What do I mean by that? Meaning when you buy a house, you get an interest rate. That interest rate spread out over 30 years is going to be more expensive because the rate's going to typically be higher, and you're going to be paying more on it because you spread out the payments or amortize the payments over a long period of time. So if you're going to do a residential property, then I always recommend a 15-year property. People think I'm crazy. That's okay. Go check out the video. The second thing we need to do is we need to learn how to invest in the stock market. Listen, the stock market is and can be a scary, scary, scary thing. But historically, the stock market has come through. Even in times of depression and recession, the stock market, again, over the course of history, has rebounded. Does that mean that it doesn't take dips? Of course not. But any savvy investor knows that when the stock market goes down, that is the time to buy, not the time to sell. But because we are such emotional people and don't understand what the market is doing, when we see the stock market go down, we automatically assume pull out our money because we're scared. Again, we have to start investing in the stock market and learning when to buy, what to buy, how to buy. So we got to start doing that. Number 3, we've got to buy life insurance. This is one that is specifically a long-term play, but there's also some short-term play and benefits in it depending on the type of insurance that you buy. That's another video. All right. But we've got to buy life insurance because our objective has to be, one of the ways that we get rid of some of this student loan debt or not continue to transfer it to the next generation is that if something happens to us, then we are able to leave an inheritance to our children, so they can pay for school. There is a way that you can put money into, you take life insurance money and then put it into a trust and say, this is for Junior's college tuition. But we don't know that. We've got to be able to, we've got to start being able to do that stuff, start investing in that kind of stuff, because think about it. Like, imagine yourself. Think about the student loan payments that you have right now. What if, how much more money would you be able to add to your monthly budget? Don't type the answer in there, but how much money would you be able to add to your monthly budget if you did not have to pay student loans? Think about that. Now, also add into that, how much more money would you be able to invest if you did not have a mortgage? Do you see the difference? So if we buy enough life insurance, then we can put enough money aside so our children, number one, don't have to take out student loans and have any student loan debt when they graduated. And number two, we can then save up or give them enough money that they can have a down payment when it's time for them to buy their first home. So they graduate college with no student loan debt, and you give them a down payment or keys to a home because you've bought it, you paid for it, either paid it outright or at least paid the down payment and got them started. Doesn't that completely change? Just look at your situation. Doesn't that completely change the trajectory of your wealth and of your system? Because now you've got, if you graduate college at 22, the next 40, at least if you live to 70, 40 years, 50 years, to be able to save and invest, as opposed to most of us spending the next 20 years trying to pay off our student loans and then being able to save and invest. So it completely changes it. The number four thing we need to do, boy, I'm hot, is we need to learn as a people, we've got to pick an industry and we've got to own it. We are one of the only communities of people who don't have a specific industry that we own, and that's a problem. So now, as it stands right now, we really have no bread and butter. The Asians have a bread and butter. And this is not, again, not any knock against any of them. This is saying that for us, we've got to figure out what we want to do as a whole, as a community, and we've got to start moving in that direction. Does it mean that everybody has to own nail shops? No. Does it mean that everybody has to, be in financial services? No. But what it means is we've got to pick something, we've got to pick an industry and own it, from the manufacturing to the sales, the whole gambit of what it is, and we've got to start owning it. Because if we don't do it, then again, we are always at the expense of somebody else giving us something. We are always, like we are right now, in the position of the consumer or the employee. Nothing wrong with consuming, nothing wrong with being an employee, but it is a dangerous position to be when you are only the borrower and not the lender. All right. Number five is we've got to start training our children to pick higher paying careers. The truth of the matter is, as much as I love and appreciate all careers, and I want us to make our decisions based upon our passions, sometimes, again, and I said this on my post, for us to go to college and get $60,000 and $70,000 in student loan debts for careers that are going to pay us $40,000 a year is absolutely counterproductive. If we're going to, and then, so let's just say we do that and we go to be a teacher, and we make $40,000 a year, we understand that because I want to be a teacher and because I love kids, which again, there's absolutely nothing wrong with that. We go back to graduate school to get a master's degree, get another $40,000 and $50,000 in student loan debts, and then come out making a job. So now we're at $90,000, $100,000, and we have a career that pays us $75,000, $80,000. The math just doesn't add up. So we've got to start thinking, if we're going to do that, again, nothing wrong with being a teacher. Love all of my teacher friends. Think you all are the greatest, and should be paid more. Let me say that. But if that's what you're going to do, then you have to go into it thinking, what other ways can I create revenue? What other ways can I create income? What other ways can I use the skills that I have as a teacher in order to bring me in additional streams of revenue? That's another video. All right. So then we've got to do that. But the one thing I will say about teachers is teachers, nurses, government employees, there are government programs that can help you, that can help you get rid of some of your student loan debt. All right. So that's, again, I just use you guys as an example. So don't send me hate mail about teachers. All right. Number six, but again, it's a totally different thing coming out, making, having $200,000 in student loan debt for a career that you're going to be making $400,000 a year. That's totally different than, y'all get where you get the math. So higher paying careers is my point. Number six, the number six thing we've got to do is we've got to learn the loopholes, and we've got to learn the loopholes in our tax system. The way the U.S. tax system, IRS system currently works is it favors the small business owner. There are tons of write-off. There's tons of credit that we get as small business owners that people who are not small business owners don't get. And so we've got to learn that system. So as we learn that system, we are able to take advantage of those. Again, we might not, if we're not in a position to change it yet, we surely can be in a position to take advantage of it. And as we take advantage of it, of course, as my good buddy Andre Dowdy says, they're going to change the rules, but that's fine. We just adjust to the rules because the rules are for everybody. So again, learn the loopholes in the tax system. So, okay, Winfred, all that sounds good. How are we going to do this? You just gave us 6 really good points. They sound really cool. Great. How are we going to do it? I'm glad you asked. Number one, the first thing you got to do is we've got to, and these are just mine to start the conversation again, is we need a moratorium on creating new debt. We've got to stop creating new debt, which means that we can then aggressively start paying off, eliminating debt, which includes our mortgages. The second thing we've got to do is we've got to start self-educating ourselves on and giving ourselves more financial literacy. I propose that you spend at least 1 hour every week learning something new that will increase your financial literacy. So whether that's understanding budgeting, whether that's understanding the stock market, whether that's understanding the different types of life insurances and its benefits and its takeaways, whether it's understanding estate planning, 1 hour a week will begin to, over time, completely change the trajectory of not only how you think, but the decisions that you make. Number 3, get a money mentor. Shameless plug. Go to my public figure page, click the link that says Money Mentor email list and sign up. When you do that, that will give you the opportunity to take advantage of some of the things that I've learned and am learning and that I'm giving you. Also, what it does is I've got some courses and things that are coming up that you can take advantage of. Shameless plug. Next thing you need to do is clean up your credit. Listen, the higher the credit score, the lower things cost. So the better our credit score is, the less things cost. Everything, just about everything we do comes back to your credit. Where you live has something to do with your credit score. How much you pay in insurance, health insurance, how much you pay for a car, how much your interest rates on your mortgages. All of that comes back to your credit score. How much you can borrow, credit score driven. So we've got to clean up our credit and make sure our credit is better. Then we need to have a spending freeze. Pick when you're going to do it, but a spending freeze, what that does is that allows us to reset our budgets. It gives us an opportunity to, again, really analyze where our money is going. Most of us don't know where our money's going. We get paid and go, I thought I just got paid. Where did my money go? Y'all ever had that feeling? No, I just had money in the bank. Where did it go? I just got paid Friday. How come I don't have any money? Y'all know what that's like. I know what it's like, so I know y'all know what that's like. And so a spending freeze allows us to really assess where our money is going. Then, and this is a more difficult one, is we need to reevaluate or evaluate if we're in the right career, made the right career choices, or if we know we have and we're in a place where we're supposed to be. Like I said earlier, how can I leverage the expertise that I have to create more income streams? How can I get more money doing what I already do? How can I not, as we call it, trade time for money? How can I create residual income? How can I create passive income? Let me give you something. I've said this before. I think you guys have heard this before. Every person, the average millionaire has not one, not two, not three, but 7 streams of income. And the beauty in having more than having 7 streams of income is if one gets low or one stops, you got 5 other ones that are continuing to bring you in money. It feels really good to wake up on Tuesday and know that you got a direct deposit hitting, and then another one coming on Friday, and another one coming the following Tuesday, and another one coming that Friday, as opposed to playing I got to make it stretch to the end of the month, to playing that game, which a lot of us play. So we've got to, again, create more streams of income. So evaluate, am I in the right career? And if I am in the right career, how can I use what I do and what I love to do to create more streams of income? And then last but not least, and I'm going to let you go, we need to adjust. Now, this is one y'all ain't going to like me on. I'm okay with that. We need to change the pattern of our family structure. One of the interesting things that I found in this study that I posted for you all is that we have the highest rates, and I want to believe it said like 68% of female-only income families, meaning you have a lot of single mothers out there who are trying to do this on their own. That, my friends, is a problem. And this is not an indictment. I'm not coming down on men. Again, we're talking about this from a position of we're not placing blame. We're not doing any of that. Because guess what? I'm divorced too. So I'm not the one to try to call, I'm not the one trying to call you out. It is just, we've got to really consider, listen, we are not going to continue, and we can talk about all the structural governmental issues that caused it and all that kind of stuff. But the truth of the matter is we've got to change it now. We can't, and I'm going to say this, let me throw this, fellas. The fellas that I know, that I'm seeing, are doing a good job of being involved, of paying their child support, all that kind of stuff. So salute to you. I'm not, again, this is not to bash anybody, but as a community, we got to do a better job, because a 2-family income is a lot. A two income family is a lot, has a lot more power than one. So again, those are my things. I gave you guys 6 things. I hope I helped you. Did I help y'all? Did I help you? Did I help you at all? If I helped you, make sure you hit the share button, and then make sure y'all hit the give me some, I know I made you think, but y'all ain't even hit look. Y'all ain't even hit no stars, the hearts and stuff. Y'all don't want to heart me up? That's all right. But anyway, I hope I hope I gave you something to think about. Thank you, Carrie. Thank you. See, Carrie gives me thumbs up. All right. So I hope this helped you guys. I hope this gave you something to think about. Again, do me a favor. Laura, how you doing? Again, make sure you guys hit that share button. My only goal today was to get this conversation started, to give you some solutions, give you some things to think about. If you have questions, hit me up. Thank you, Cicely. See, Cicely gonna hit the heart button. That's what I'm talking about. Y'all, make sure you guys hit the share button. Share this within your groups. Again, share this with as many people as you can. We've got to start this conversation, because if we don't start it now, we're only going to get further and further and further behind, and that's not what we need to do. All right. I love you guys. I appreciate you guys. Again, I love you too, Laura. I want you guys to do me a favor. Make sure you subscribe, like I said, to go to my public figure page. Sign up for the Money Mentor mailing list. Also, on Tuesdays, make sure you hit us up on Global Drive on the Scoop Radio Show. Y'all see I'm sweating. The Scoop Radio Show. This Tuesday, thanks, Sasha. This Tuesday, who we got this Tuesday? This Tuesday, y'all, we got some pretty cool shows coming up, by the way. So this Tuesday, we got, how to transition from dating to marriage, this coming Tuesday. So we want to definitely make sure that that you guys join us for that. After that, y'all, I'm telling y'all, for probably out the next 6 weeks, I'm looking at my shows like, we got some good shows. So we got how to transition from dating to marriage. We've got how to survive marriage storms. Rob McClish is going to be with us talking about life after divorce. We've got are we really supposed to be together? We just confirmed Stephen Thurston's going to be with us. Justice Wordlaw, my little cuz, who is one of the top social media marketing men in the country, is going to be with us talking about how to grow your business through social media marketing.